Hi, this is Dave with your weekly market recap video. Let's take a look this week, ending Friday, September the 14th. It was a pretty big week in the markets, and the big news this week was the essentially the quantitative easing announced out of Europe and out of the United States, with Bernanke coming out and saying that the banks will provide, I think the word he used to describe it was unlimited financing for the markets, with the issuing of $40 billion a month in bonds and mortgage-backed securities that they'll be buying. So that's a huge stimulus program that's gone underway. And as you can see, the fact that the economic data coming out, different data points suggesting that the economy is not getting better, has had no effect on the market, just keeps climbing this wall of worry. And that's pretty typical in certain market situations, if you study the past and what the market has done. So let's take a look at the Dow futures. Here are the Dow futures on the daily chart. And one of the things we talked about last week was this this sort of wedge pattern, or not wedge pattern, sorry, this sort of cup with handle pattern that is forming. And if you look at right here, if you look at this kind of cup pattern forming here, and then we kind of had a handle, and then you can see the market broke this minor downtrend line and pushed through it, and it broke through some of these resistance levels and some of these highs that we put in at the top of these of this cup pattern. So you can see here, on this day was Thursday right here, we powered through on the Fed announcement, and we just kind of didn't look back. And then Friday we pushed even higher, and we closed the week fairly close to the week's highs. So this is a pretty significant development in the stock indices. And essentially what it looks like is that the markets look like they want to go higher. And this is something that we've been looking at from a technical analysis perspective. Just a quick reminder, this video is for educational purposes only, and is just to take a look at different analysis techniques, technical analysis techniques, and study the markets from that perspective. Is not meant to provide advice of any kind. So now that we've gotten that out of the way for the 100th time, let's take a look at some key levels that might be coming into play. So from this perspective, I like to look at when I see these kind of cup patterns happen, and then you get the cup with handle sort of pattern, and then it kind of comes back up and it breaks through the top of the cup pattern. What I like to look at is Fibonacci extensions. So our next meetup on September the 30th is going to focus on different analysis techniques having to do with fib extensions. So I think this is a good time to kind of highlight a couple of them as a primer. So let's take a look at the this tool here. This is a Fibonacci retracement tool, but it also acts as an extension tool. So what I'm doing is I'm drawing from the highs of the move here to the low of the move here, right in around there. I'm going to grab the bottom of the tail, and what I'm looking at here is anything over the 100%, which is the high of the move, and the low of the move being 0%. So this would be the high, or 100%, and this would be the low, or 0%. Okay, so here's the low, here's the high, and basically what I'm looking at is 127.2, or a 1272 extension. Sorry, just had to pause the video quickly there. So as I was saying, what I'm looking at is a 1272 extension of that move for potential targets from a technical perspective. And what you can see here is we've already hit that move here at 13,528. Now the values in the stock indices got a little bit wonky, and they changed a little bit because we had contract rollover from the September to the December contract month. I'm not sure why the stock indices have contract rollover. I understand why, certain things like grain futures have rollover dates, because you take physical delivery of those instruments at some point in time in the future, and it makes sense for them to, to have a rollover date. But stock indices and other futures also employ that same methodology. So it kind of messes with the prices a little bit. It's a little bit annoying, but it's something to get used to when you're trading futures. So I'm charting here the continuous contract, which kind of rolls all of the previous data into one smooth data feed, so that you can kind of look at past history, even though those contracts have expired. So we're looking at this level here. So you've got this cup pattern, pullback with the handle, breakout of the top of the cup area, and we've hit this 1272 extension. And then we're also looking at potentially, if I zoom out the chart here, you've got the easy target at the 1272 extension here, and then potentially a bigger target up and around the 1618 extension, if this really gets going. So I'm not sure that we're really just going to get a push up into that level. It would make sense to get a pullback first, into this kind of rising 21 period exponential moving average. But you can get some strange action, especially when there's intervention in the markets. And basically you've got this trend line in play. You've got the 21 exponential period moving average in play. Everything looks positive here on my trending indicator. And, coming into this level, I think over the next, I don't think it's going to happen tomorrow or the day after or anything like that. But, over a course of several weeks, or several months, it's quite possible. So I'm more bullish than bearish on this market, for obvious reasons. And do I think we could hit 14,000 in the Dow? I'm not going to say it's impossible. It is something that kind of makes sense to me, given the announcement out of the Fed. Before that happens, though, I would be very cautious at these levels. But I'd certainly be looking at a pullback and looking to see if we can come up somewhere in and around those levels over the course of the next several weeks. Taking a look at then the sister indices, the S&P futures on the daily chart, you have much the same situation, much the same pattern, and the same kind of outlook could be used. The same kind of outlook or analysis could be argued for these other indices. So, that would bring us up to, here's the 1272, here's the 1618 extension of this kind of cup move. And, it's looking very bullish. If we take a look at the NASDAQ futures at NQ, you've got much the same situation here. I'm going to get rid of these fibs because we were looking at this retracement from the high to low. This was more a retracement. Now we're looking for an extension. So it's very much the same kind of analysis. I like to look at the sister indices just to make sure that they're all kind of confirming each other and moving in the same direction. So it hasn't quite hit that 1272 extension yet, but it's within a stone's throw away. And then you've got the 1618 up and around these levels here. So let's take a look then at the transports, if I can remember the symbol. I believe it's TRAN. Okay, so the transports, the news in the transports over the last couple of weeks were that, from a Dow theory perspective, they weren't really confirming the move in the Dow or the other indices. And now what you have here is you had this wedge pattern here, a bit of a fake out of the bottom of this wedge, and now it seems to be slowly, methodically pushing through the top of this wedge. It hasn't really cleared it. I'd like to see some more, decisive action above that wedge. But it's pretty obvious that the transports are lagging the indices. And I think you're going to get some interesting action like that happen when you're dealing with, what I'll call interventionist markets. All of this move is really precipitated by the Fed announcement, the central bank announcement, and, all of this stimulus quantitative easing type measures that are coming into the markets. It seems that, they want to keep asset prices inflated in order, to kind of keep the machine going here. So, I'm not going to fight it. I don't think it's smart. You're dealing with a lot of money at play here, and trying to catch a reverse falling knife isn't usually the way that I like to approach the markets. It's never worked out well for me in the past. So that's kind of how I'm looking at that. Let's take a look now at the same markets, but from the Darvish squeeze perspective, to see if that's giving us any different data points. So then, taking a look at the Dow from the Darvish squeeze perspective, the Dow futures, starting kind of again at the beginning, we have this sort of Darvish squeeze in play with targets already met up and around these levels in here. And, it's still, everything looks very positive from an indicator perspective. You've got the Hakanashi's blue. You've got this long squeeze in play. With the break of the top of the Darvish box, what I call a Darvish squeeze. MACD looks positive. You're starting to get a little bit of volume coming into this market. My trending indicator is positive. So everything looks good here, but this target on the daily chart has been met, projecting this Darvish box out on a one-to-one basis here, the range. So this target has been met. If we take a look at the weekly chart, then you can see there's a confluence of signals between the daily and then the weekly chart. Here's the weekly chart here, and what you can see is I've got some key levels on there that we're above now, but you've got this weekly Darvish squeeze in play where you've got the break of the top of this Darvish box automatically fires one of these signals here to let you know that it's pushing through. We already had the pullback down to this trend line support. We didn't quite get down to 12,800, which is what I was sort of looking for to personally take a long swing trade. So I'm essentially just kind of on the sidelines watching this. We didn't get a deep enough pullback here to get me interested in the market, but it's still kind of playing out. If you look at, you've got all of these indicators the same as the daily chart, positive. You have a slight divergence here in the momentum of the trending indicator, but the price action is kind of trumping everything, and we've broken above this Darvish box, and we're about, I want to say about a quarter of the way, maybe just over a quarter of the way towards some of these higher targets. But I mean, realistically, half the width of that box, 3/4 the width of that box will bring you up somewhere around 14,000 in the Dow. We're at 13,500, which is a target, one of the early targets that I was looking at, and that's kind of played out potentially, 13,750, 14,000 in the Dow futures. I think it's an achievable target given what is going on with the entire stimulus situation with the central banks and with Bernanke's announcements, as I mentioned earlier in this video. So that looks like we're definitely more bullish than bearish, and I'm kind of looking at the path of least resistance and the larger pressures to be on the long side of the market. So let's take a look at the S&P. Is much the same. On the Darvish squeeze on the daily chart, you have targets met. You don't have a weekly signal. On the NASDAQ futures, you have on the daily chart, I'll just expand it out. You have targets a little bit higher up and around here, and you have a Darvish squeeze signal in effect the same as the Dow with targets up and around that area. And then if you take a look at the weekly chart, there's not a valid Darvish squeeze signal on the weekly chart, but there is a Darvish breakout on the weekly chart. So all of those things are fairly in alignment. There is a decent confluence of those levels on all of the sister indices. If we take a look, I didn't want to look at that. If we take a look at the transports from the Darvish squeeze perspective, you're still you don't have any signals, but you have a very elongated weekly signal here on the squeeze, just being in a quiet period when those dots are red. And then you have a potential breakout right in around this area here, which would be nice to see some kind of follow through with the transports, above this level here, in order to see this kind of take off and go into confluence with the stock indices, with the stock index futures. So that's all I have this week for the stock index futures. Everything looks more bullish than bearish. It looks good to the high side. Major news this week, as mentioned, was the stimulus coming out of Europe and especially coming out of the United States with Ben Bernanke's announcement. So that's all I have this week. I hope to see you at the next update on September the 30th at the meetup, or at the next video next weekend. So good trading, and look forward to seeing you soon. Take care.